I'm an old fucker, man. I'm gonna be 50 this summer.
Hey there, this is Hunter Riley, author of Stack Silver Get Gold, www.stacksilvergetgoldbybitcoin.com. And today I've got a special emergency interview with Andy Schetman, founder, CEO, I think, of Miles Franklin Precious Metals Investments, milesfranklin.com. Last time I interviewed Andy, he was the $5 billion gold dealer. This time, he's the $6 billion gold dealer. Andy, how are you doing today?
Hunter, good to see you, buddy. Hanging in there.
Yeah,
There. I'd rather be sitting next to you, sharing a beer, shaking your hand, but it doesn't work so well right now. This is the next best thing.
All right. So anything interesting going on lately in the markets?
If that's not a softball, I don't know what is. Interesting to say the least. The precious metals industry is akin to the bottled water and toilet paper aisle at Costco. And literally in the past 5 weeks, our firm has done close to 6 months worth of business, as we're fielding anywhere from 400 to 600 orders per day, which is about 20 to 25 times more than what we normally field throughout the last several years.
Wow. And for anybody watching this is March 31st, I think, of 2020. We are in the middle of a global pandemic with the coronavirus here and a big market crash too. So fun stuff all around. So let's get to that market crash, 220 market crash. Do you see any similarities between now, the crash today, what's going on with precious metals, and what happened in 2008?
Well, the only similarity I see, Hunter, is in the reaction to the precious metals market. What happened in '08 was gold went from 1,000 to 700 and silver from 21 to 9. When that happened, within a week, every major mint in the world was sold out of product. And what's interesting about that, Hunter, is that we are taught to believe that if the price of something is falling or crashing or cascading, that would symbolize or signify no demand. And no demand is the equivalent to an excess of supply, as they move inverse of each other on the axis. So anyone who's ever taken any economic classes whatsoever, chapter 1 is the law of supply and demand, and that's an inverse relationship. So in '08, when the price was cascading from 1,000 to 700 and 21 to 9, a 30% and a 60% drop respectively, one would assume that a plethora of supply was being cascaded down upon the market, but in reality, that was completely the opposite. In fact, every major mint in the world was sold out of product. You have 5 major ones: US, Canada, Australia, Austria, South Africa. Canadian Mint and the Austrian Mint were working 24 hours a day, 3 8-hour shifts. Ultimately, were 12 to 16 weeks back ordered once they came back online. The US Mint was shut down 8 times in '08. The South African Rand Mint ran out of product for the first time in the history of the mint, and the Perth Mint in Australia took no new business after August of that year. We are seeing a very similar situation right now with all of the major mints. Right now, the Canadian Mint is shut down. Yesterday, the US Mint shut down, although they're going to open back up on Wednesday, as one of their security guards, who does not have access to the production floor, was diagnosed with the coronavirus. The Perth Mint is sold out of 1-ounce gold bars, and just about every major retailer and major distributor in the United States is at or near empty across the board. Now, that's almost identical to what we saw in '08, but when I look at the two differences, 2008 was a liquidity issue. The Fed was able to step in, pump in tons of money, make interest rates next to nothing, like we see right now. But the difference is that all of that money and all that liquidity would spur on economic growth. They could restart the engine maybe by kickstarting it. Here, I don't care how much money they drop from helicopters. If people are afraid to go outside and catch the money without catching the virus, you're not going to kickstart a Keynesian-based economy that is characterized by consumption, debt, and spending. In fact, what you're going to do is witness hyper-deflation. And what you are witnessing in real time is the Federal Reserve stepping in to hyperinflate any way that they can in a desperate attempt to keep the ball up in the air. But I'm very concerned about the way things are going, and in particular, as it pertains to the precious metals market. In a way, things normalized by the end of the year. The mints came back online and everything was fine, and you weren't afraid to go watch the NCAA tournament at a bar. You weren't afraid to go to a movie. You weren't afraid to go give your buddy a hug. All those things now are such that I don't see how this kickstarts anytime soon. And I'm concerned that the supply chain will get completely turned upside down as it pertains to, as an example, the US Mint that's located in West Point, New York, the Canadian Mint that's located just across the border in Ottawa, Canada, or any of the other mints that require some form of shipping and transit and packaging and an infrastructure that allows for free flowing of product. I'm incredibly concerned about that. And then even closer to home as it relates to the infrastructure, if all of a sudden New York gets shut down completely and totally, like Trump was talking about doing this week, if that happens next week, how does product get out of the West Point Mint? It doesn't. And so I'm very, very concerned, Hunter, that this time is different. You know, you always hear it, don't believe the statement, this time is different. I think this time is different. And I think it's different because, you know, I just can't see in my mind's eye anytime soon how we re-kick this economy that is so much in need of spending and consumption. And, you know, right now, I think we're in the antithesis of that environment.
Okay, so before everybody who just heard that clicks off the interview right now and leaves, can people still get gold and silver from you?
Yeah, and we've been one of the few that has been able to do this. And because I've gotten in front of this, largely in part to Chris Martenson, who I'd like just to send a shout out to, peakprosperity.com. He's a genius. And he's not only a heck of an economist, he's a PhD in epidemiology. And I've been watching his show for over 60 days. Every night he puts something out on YouTube. And it allowed me to not only prepare personally, but to prepare professionally and to load up on as much possible supply as I can to liquefy my supply routes and to get way ahead of this. Most companies in America are completely sold out. We do still have product. Now, I'll tell you that the premiums are higher than I've ever seen in my career. Premiums are on top of gold and silver and platinum spot prices, and they are a reflection of supply or lack thereof and demand, both of which are at roaring levels. The supply is falling globally and the demand is off the charts. So the question becomes, is it worth it to pay these high premiums? And the only way to answer that is to say, how quickly do you think things get restarted? When does the supply chain become reinvigorated? I don't know the answer to that, Hunter, and I'm not trying to be a pessimist. I have never sold gold in 30 years based upon fear. I started in this industry when I was 19 years old. I'm 49 today. There was one rule my father told me that I would abide by when we started the company, and only one rule. I said, hey, I can deal with one rule. What's that? He said, you'll buy something every 2 weeks. That's it. So I own the company now. I'm the president, and I own, I own 51%. He won't fire me any longer, even though he's my partner still. But I have honored that promise to him and bought something every 2 weeks for 30 years. It's wealth to me. It's immutable wealth. It is not an investment. I don't use it to buy as the sky is falling insurance. Granted, in this instance, if the dollar runs into trouble, I'm glad that I own it. But to me, gold and silver are wealth. And I don't sell it based upon fear. I sell it based upon accumulation of 6,000-year-old wealth.
So if you're a beginner precious metals investor right now, do you have a favorite? Do you prefer gold or silver? I know that gold silver ratio is pretty high right now, 113 or to 1 or something like that. If you were just starting out you're making your first investment into gold and silver right now, do you have a percentage or something, an allocation percentage?
Yeah, I mean, so the silver to gold ratio is akin to 4 feet of snow in the Florida Keys in July. It's about as unusual of an anomaly as, in fact, it is the largest anomaly price-wise, ratio-wise, I've ever seen in 30 years. Silver is the most undervalued commodity on the planet. And I can't think of another commodity that is trading at a third of its value from 1980. So when we talk about real value, it's in silver. The gold, as far as gold is concerned, yeah, I think everyone should own it. And the reclassification of gold as a tier 1 asset by the Bank of International Settlements last April, almost a year ago to the day, is the most significant event of my career. You have the most sophisticated, well-informed, well-funded, influential traders on the globe who, for the first time in the last 80 years since Bretton Woods, have created another tier 1 asset. It used to only be dollars and treasuries. Now gold has joined the party. So when we talk about what the central planners view gold as in terms of a long game, I think it's huge. But remember, there's a 90% correlation throughout all of history between gold and silver. So as one goes, so too will the other. Typically, gold goes first, silver goes further. I would say to you that silver is an amazing, amazing value right now, even with the high premiums that you're paying right now. To me, you will never find a value that is also a hedge and a form, I guess, of insurance at the same time that offers you that type of upside potential. To me, it's the number 1 play, gold being a very close second.
So what you just said there about the most significant event of your career, break that down into 5th grade math terms for me. That means that the central banks have gone from not liking gold to loving it, basically.
Correct. So since Bretton Woods, there's only been one tier 1 asset, US dollars and treasuries. I could never understand, Hunter, why the banks for my whole career were selling gold. It never made sense to me. In 2002, at $252 an ounce, Gordon Brown, the head of the Bank of England, sold all their gold at $252, nearly. So, I mean, talk about idiotic. But it never made sense to me why the central banks were always lining up to sell their gold. And it didn't until last year, April 1st. So there were 4 reasons why the central banks would always want to sell their gold. Number 1, it didn't pay interest or doesn't pay interest. Number 2, it costs money to store it. Number 3, it's unpredictable in terms of its movement. And lastly, and the biggest reason, was the tier 3 status. So the central banks were valuing it as a tier 3 status, which meant only 50% of the value was calculated on the balance sheet. So a central banker, especially a young one that would have taken over for the old gray hairs who had no affinity for gold, the young guys, they'd say, what do we want this stuff for? Costs money to store, it's unpredictable, pays no interest, let's buy US treasuries, because that tier 3 status, which only gives us 50% credit, denigrates our balance sheet and compromises our ability to sell bonds and transact international business. So let's get rid of it and get some US treasuries that will at least pay a modicum of interest. I mean, in the 90s, they were paying 9%. So now it's not the case any longer, but suffice it to say, it was better than nothing the entire time. And so up through 2017, all the central banks were net sellers of gold. All of a sudden in 2018, something crazy happened. Out of the clear blue, the central banks did a 180-degree turn and start accumulating more gold than at any time in the previous 60 years. 2019, those numbers continue and in fact increased by 90%. 2020, this year, those numbers are also continuing to skyrocket with every small central bank from Central Europe to South America accumulating gold. And it wasn't until April 1st of last year where the Bank of International Settlements, through the Basel III agreement, announced that gold would be reclassified as the only other tier 1 asset on the planet next to US dollars. So my question to you and your listeners is, why would the central banks take it upon themselves after 80 years of trusting the dollar and treasuries as the only tier 1 asset? Why would they choose gold? Why not choose euros? Why not choose a special drawing rights by the IMF or something? Why do they choose gold if it not to be an important part of the long game? So when we talk about it being significant, you have the most influential, well-funded, well-informed traders on the globe who've done a 180 and have gone from net sellers of gold to the largest purchasers of gold on the planet. And to me, at that level, nothing is done coincidentally. And it's typically done with great forethought. To me, maybe the most nefarious part of it all is that they had been purchasing it voraciously since 2018 and then announced it in the middle of 2019. So there's no question but that the central banks have a plan for gold. And if I had to guess, it will be something significant, or there would have been no other reason to reclassify it as a tier 1 asset.
Nice. Okay. So gold in the eyes of government is now super important.
Yes, it's the highest form of collateral right now, just like U.S. treasuries and U.S. dollars, which really doesn't make much sense, but that is the way it goes.
Before we tell people how and why and what to expect when they buy gold and silver from you for the first time, let's get into that that Comex thing we were talking about for a little while.
Yeah. So what you're seeing, is what it looks like we are seeing is a major signal failure on the Comex market. The Comex market, the commodities exchange in Chicago, is the price setting mechanism for the world. Now, just as a footnote, the Shanghai Gold Exchange has delivered over 90 times more gold in the past 2 years to people than the Comex has. Shanghai Gold Exchange should be the price setting mechanism, not the Comex, but that's neither here nor there. So I tried to place a very significant order this last Thursday, $2 million. And I called one of my distributors and I said, I need to lock in this order. What can we do on price for American Eagles? And the price I was quoted was $35 over what Kitco had on their website for spot. I said, whoa, what do you mean by that? What the hell's going on? I said, we're talking 1,700 coins. I've already quoted them a price. How can I go back and tell them it's $35 more? And spot that he sees on every website across America is wrong. And that is because the term rehypothecation. Basically, the Comex has rehypothecated their gold to such an extent that they don't have enough gold on hand to meet obligations if traders were to start to demand delivery. And so the price that we see in the United States is actually about $30 to $40 less than getting it, the real thing, in London. In other words, Comex can't deliver, doesn't have the gold, so what's it worth? The price that they're quoting is not real. In order to really get it in London, then you pay $30 to $40 more. But here's the problem. The United States on the commodities exchange, they use 100-ounce gold bars. In London, they use 400-ounce gold bars. So they're buying gold in London at a premium to send it back to the United States. What are they going to refine it, break it into 100-ounce bars? They're not going to cut it with a butter knife. So the point of it is that it is the beginning, perhaps, of a signal failure on Comex. And what will happen is that they will cash settle all those people who demand delivery. This is exactly what the Hunt brothers did in 1980. In 1980, the Hunt brothers saw there were way more paper contracts than silver bars in the vault. So they demanded delivery. Comex changed the rules. That's exactly what they'll do this time. If you get a bunch of traders who demand delivery, seeing that the price of gold is decoupling from the real price of gold is decoupling from the price quoted, they will demand delivery. And that's what they're trying to do right now. And I would not be surprised one lick if you see the Comex market try to change the rules midstream and cash settle all those contracts, because it's rehypothecated by a tremendous amount, 500, 600, 700 ounces for every one. In other words, if everyone demanded their 100-ounce bar, somewhere between 500 and 700 people wouldn't get it for every one that does. They'd be cash settled. And that's the whole concept of rehypothecation. And it's coming home to roost right now and witnessing it in a disconnection between London and New York.
Wow. That sounds like a mess.
It's the beginning of people have always talked about the Comex market blowing up. This is the beginning of it. This is how it would happen, a disconnection in paper price and real price, and the arbitrage that would happen as a result. So it's concerning for sure.
So for people who are new to all this, what's basically going on is you're having two different prices. You're having a physical metals price, and then what the price is listed on the at spot, et cetera.
Correct. So the London Metals Exchange has gold. The Chicago Comex doesn't have enough. And so in order to get the gold, they have to buy it from London. And London says, no, your price is wrong. It's higher than that if you want it.
So for everybody who owns physical, can you see one day where maybe the physical price Well, it is right now with the premiums and everything
Yes.
onto it, but it really gets bigger than whatever the listed price is.
Yeah, absolutely. I see that very, very, very clearly, as a matter of fact. In 1980, Hunter, the average portfolio in the United States had 8% of it dedicated to precious metals. And that was the last time we saw gold and the Dow cross at 800. They were 1-to-1. Now, the average allocation to precious metals in the United States is 0.5%. It's getting impossible to get product. If we saw a revision to the mean, I'm a big ratio mathematics guy. If you go revision to the mean, the average of the past 40 years, 30 years, what you have is 2.5%. If we saw people get scared in the stock market and just a small revision to the mean, pull out only 2.5% of their portfolio out of the market and put it into gold, that's a 5-fold increase in demand. And within a day or two, there'd be nothing left in this industry under the current circumstances, where not only are the mints running at huge, huge, huge supply demand deficits in terms of demand, but in terms of sending it out to everybody, every major distributor across the globe. And this is really important for people to listen to who have purchased gold from anyone, from us or any company out there. Right now, all of these companies that send you gold, they are working skeleton crews due to social distancing. They have to pare down their shipping department so that the whole place doesn't get shut down, so that someone doesn't get sick. And so now they have a fraction of the number of people boxing things up with 20 to 30 times the volume. It's creating kind of a gummed up system in terms of just getting product out to the end user. So we have all sorts of complications, supply chain driven, whether it be from the production all the way down to the end user shipping it. And so that's when there's very little participation in the United States. I would say if people are interested in getting metal, the price is irrelevant. It's getting it in your hands as soon as you can. And unless you think things normalize sometime soon. And if you do, great, then wait, don't pay these high premiums. Wait for things to get back to normal, as they did in 08. Mm-hmm. And then all will be great. My only concern is that this is undefined, how long this goes. And if it continues down the path we're heading now, there'll be nothing left by May 1st for the entire industry.
Right. So benefits of waiting, maybe that premium comes down a little bit and they don't pay so much initially for them. However, this could be, what everybody has been waiting for in the industry. And
certainly not the way I drew it up. Let me put it this way. The amount of business we've done in the past 2 months is every business owner's dream. But like I said, I'd give most of it up to sit at a bar with one of my best friends, watch the NCAA and have a beer. Something as mundane as that is just out. And so you have to ask yourself, is it worth it? I don't know. I'm happy that we're doing business, but never the way I drew it up. And I take no joy in doing well at the expense of everything around me that means something to me and everyone.
See, that's why I like you. That's why you're my favorite precious metals investment.
Appreciate
right
that,
there. One more sidewinder for you here. So you're the $6 billion gold dealer. You've got your own stack that you've been building up through the years.
Yes.
You're not going to hold it till you die. When are you going to sell it? What's a trigger that you're going to sell it?
Knock it off. Sorry. Working
like a Dow gold ratio or
knock it off. Working from home like everyone else in America. Sorry about that.
The dog doesn't want you to give up the answer to this.
No. So as far as that is concerned, look, the way that I look at my gold and silver, it's wealth. It's there when I need it. And if I don't have to use it, great. I'll pass it on to my children. If I do, I'm damn glad I have it. I have looked at my gold always as wealth. And if I need to access it, I will. And if all of a sudden things slow down so much that we had to, kind of coast for 6 months at Miles Franklin because there's no product, yeah, I'd have to sell some. Short of that, I hope to never use it. I hope to never spend it. I hope to give it to my children someday because it's wealth that has gone on for 6,000 years, and it'll be wealth in the year 3000 when my great-great-grandchildren are spending it. So you can't say that about much else. In fact, as Doug Casey is fond of saying, gold is the only asset on the planet that is not simultaneously someone else's liability. So it is my asset to do with as I please. I hope I never need to use it. If I do, it'll be in a time where I've had no other choice. And if not, my children and grandchildren someday, hopefully not too soon, will inherit that from me. So you know, the other answer to that is, look, everything is a cycle. And, you know, we're perhaps ending a 25-year bull market cycle in bonds. We're ending a almost equally long cycle in stocks, bull markets of enormous proportions. And, you know, maybe it'll be buying blue chip stocks trading at single-digit price to earnings ratios, paying a 7 or 8% dividend. Maybe it'll be that beautiful home on the lake next to you that's selling for pennies on the dollar. You never know. Whatever it is, it will be.
Not.
Yeah, it would be taking advantage of an opportunity. I mean, look, you know, all the money that the Fed has pumped into the system over the last 12 years has gone into asset price inflation, real estate, stocks, and bonds. They have all inflated. We haven't seen price inflation yet, and that's coming, I think. But in terms of asset price inflation, we've seen that. I view what's happening right now as deflationary, very, very much so. And by the way, the comment I just made about gold being the only asset that is not simultaneously someone else's liability is the singular reason why gold performs best in deflation. People talk about it being an inflation hedge, and it is. But in deflation, it's all about counterparty risk, people not being able to hold up their end of the bargain. Gold never has that. So, you know, bottom line is, maybe there will come a time when there's such an amazing value in real estate or in equities or bonds, whatever it may be, that I have no choice but to sell my gold. But short of that, Hunter, gold to me is wealth that I hope I pass on privately outside of probate, quietly to my family. You know, to me, it's just, that is what it's for. It's wealth there when you need it, and a great way to give money to your family when you don't.
I got you. Right on. Okay, so for the beginners here, I tell people you are the best dealer in the world to buy gold and silver, precious metals from. You've got platinum, palladium too. And one of the reasons I tell them this is because of where you based your business.
Good
Tell
point.
us about that just
Yeah,
for a second.
sure. So we're in Minnesota. And by the way, I appreciate you saying that. I take that very seriously. You know, I've worked real hard. We've never had a customer complaint ever in 30 years. $6 billion in transactions, not one complaint. I take that really seriously. And on top of our accreditation with the United States Mint as one of only 27 companies ever approved as a reseller, or A+ rating with the Better Business Bureau, all of those accolades don't mean squat to the state of Minnesota. State of Minnesota is the only state in the United States that regulates the precious metals industry. We are beholden to the Commissioner of Commerce with a 7-figure surety bond, with background checks of every employee and personnel annually, myself included, and continuing education and compliance that no one else in the country has to abide by unless you're in Minnesota or you sell product into Minnesota. And that is the reason that for any of your listeners in Minnesota, why they try to buy from any other online company. See, I, on the online scene, maintain a very low profile. I shut my online store off. I do not want to be that. There's too much potential fraud and identity theft. And I stopped doing that. But as I've mentioned in most of my podcasts, I'll beat any price in America. Just don't want to do it online. But anyone who tries to buy online and have delivered to Minnesota, 99% of the companies across the country will not sell into Minnesota. They've boycotted it because they would be subservient to the Commissioner of Commerce the way that we are, with background checks, surety bonds based on annual business. Has nothing to do with what they do in Minnesota. If they sell 1 ounce into the state, they must be licensed and bonded. So no one's doing it because it's onerous. But what it means for the people buying from us, it means that you cannot buy from a safer company in a federally non-regulated industry, period. In the last 5 years, there have been 4 companies that stole over $200 million, the largest, cheapest online companies. And if I stole every penny that someone sent me and tried to go sit on a beach in Tahiti, the state of Minnesota would pay them from our surety bond and then send a bounty hunter to find me on the beach sipping Mai Tais. So it gives them peace of mind on top of a good reputation, on top of accreditation with the U.S. Mint and the Better Business Bureau. State of Minnesota guarantees that no matter what, it's the safest transaction in the industry.
Yeah, there we go. Now, I'm a first-time precious metals buyer. Let's just go over really quickly what that process looks like. So, like you just said, you don't like selling stuff online, too much room for fraud there. So we'd call you up, and something unique about you, which I don't like because I feel like I don't feel like I'm in the club, is you put your cell phone number on your freaking website.
Yeah.
So first time buyers, they dial up your cell phone number.
So yeah, so people, I'm very easy to reach, whether it be by email, our 800 number, or my cell phone, all of which my clients have. We discuss things, we get questions answered. We have no problem in answering questions long before an order is placed. Someone doesn't have to call us with the intention of placing an order. Trust and business is earned. It's not a given, and we would like to make sure that, look, I learned long ago, Hunter, that the most important asset you can own is peace of mind. And if you do something just because someone tells you you need to do it, not knowing anything about it, doesn't give you peace of mind. So we take the time to educate. We publish a daily newsletter. Someone will call us, they'll ask us questions. We will, if we get those questions answered properly, that means we've done our job right, then we lock in an order, hopefully. That order is then confirmed, locked in with futures contracts to guarantee the price in this volatile world we live in. We send an email with as the form of a receipt, and people can pay by wire, by ACH, which is a automatic check, or by personal check. ACHs and personal check take 7 business days to clear, and a wire under normal circumstances will ship within 24 to 48 hours. This is anything but normal right now. But suffice it to say, that's it. We turn around, we ship the product by insured mail, or UPS. All of our packages are insured by Lloyd's of London, typically. We only put a very minimal amount of insurance on our package just to take it out of the Amazon stream so that the carrier gives special care to it, doesn't throw it around, has to be signed for. So once it's signed for, the insurance program with Lloyd's that mirrors the UPS or the USPS program, it's then released. It's insured the whole way for the full amount, but the carrier who drops it off will only know it's insured for a few $100 and is adult signature required. It could be a $100,000 package insured by UPS for $200, insured by Lloyd's for $99,800. And that way we give anonymity from start to finish. And it's really that simple.
Gotcha.
Literally.
So people could call you up, either talk to you or one of the brokers, Bob over there or somebody, and discuss the allocation that they feel, comfortable with of gold and silver, platinum, palladium. They could have it delivered to them if they want. You also have a pretty private storage system, I think.
We have domestic storage and we have international storage. We have worldwide exclusives with Brinks. We're the only ones that they've granted 2 things to. Number one, we have a fixed rate structure in our storage accounts in Brinks where it's based on the number of ounces deposited, not the value. So as the price goes higher, the storage rate stays fixed. Everyone else in the industry uses percentage of asset value model. And that's because the greatest cost component in a storage facility is insurance. And if what you're insuring goes up in value, so too does what you have to charge people. So we have negotiated a fixed rate. And also we have the only fully insured safe deposit box program in North America in Brinks Toronto and in Brinks Vancouver. 100% non-reportable to the federal government by FACTA, FBAR, or 1040. Complete invisibility legally, fixed rate structure. If the people are not able to get up to the facility to access their metal, to add to it or subtract from it, we send them a Federal Express air bill. They drop 1 key in the envelope, affix the air bill to it, goes right up to the facility where then things are transacted under dual custody, meaning 2 people, and under digital camera. Then the key is sent back, if applicable, with a new certificate that supersedes the previous. Everything is fully insured. So yes, we have wonderful storage programs outside the border in Canada, Montreal, Toronto, Vancouver, and here in the States as well. And for those people who are looking for storage, we can certainly help. I would typically recommend people who don't have an exposure to metal take possession of some first, and then work on storage secondarily. but having some at home is a nice idea, and that's usually our preferred first way of doing it.
Bam. Now, for anybody who's going to call from this interview, you told me something really, you can't beat this, is that if they call you up and mention, say, you know, they know Hunter Riley, you've got a beat any price guarantee. Is
100%.
that correct?
So any nationally publicized retail price, if they put Hunter Riley in the subject line and they're interested in purchasing, granted, premiums are high, product selection is low right now, but I will beat any price across the country, 100%. I've been doing it now for the past 2 months. On all the podcasts I've been on in the industry, I've been saying this and I've been doing it. And that's probably why we've done so much business lately. But suffice it to say, price will not be an issue. I'm one of the few companies who actually has supply, and we'll continue to offer that as long as we possibly can. Again, please understand, Hunter, you've known me a long time. I've never spoken this way, ever. But I do think it's important. Unless people think this is going to be a V-shaped deal where it's down and then right back up and everything's great again sometime soon, you want to do this fast. Because if someone called me right now and said they wanted a $10 million order, I couldn't do it. Now, I could have done that all day long for the past 30 years. I can't do it right now. I could hedge the gold and silver price and then fill it as product comes in. But anyone who said, I need $10 million in gold and silver delivered to me by the end of next week, I'd say, thank you for your offer, but I can't do it. Now that's about as painful as it gets, but that's reality. And so that's how frail this market is right now. It's becoming more fragile every single moment.
So if you call Andy up, not only are you going to get that beat any price guarantee, but I'm also going to give you a free half-hour phone consultation and free access to my online training program. It's called Stack Silver, Get Gold, Buy Bitcoin. It teaches you everything you need to know in video training lessons about the precious metals and the cryptocurrency markets, which I believe cryptocurrency is got a future coming up here. And from what Andy was telling me earlier, we're not going to get into it though, is that the Fed thinks is starting to look a little bit like they like a digital currency as well. So somebody wants to buy gold and silver from you. How do they get a hold of you right now?
Send me an email at andy@milesfranklin.com. I will reply back. They'll have all my contact information, including my cell phone. Put Hunter Riley in the subject line. They don't have to purchase right now. I'm happy to answer questions like you said. Give that consultation. That's what I do every day. But if they are looking to purchase, as much as specific as they can get would help. I will reply back promptly and give them their options. Let them know what we can do for them.
Awesome, Andy. Thank you very much. Great interview today. I'll see you soon. And this is milesfranklin.com. Andy at milesfranklin.com. Your phone number?
My direct dial, 800-255-1129. And that is ringing to my cell phone now, as the governor in the state of Minnesota has made us all work from home. So 1-800-255-1129 toll free will ring to my cell phone. I am on the phone 24/7 these days, it seems. So leave a message. If you get my voicemail, I will reply back. And Hunter, I appreciate it very much. And you take care of yourself. And I will look forward to catching up with you somewhere shortly down the road.
Yeah, great interview. Hopefully we talk before you become the $7 billion gold dealer here.
I'd like that very much, buddy.
Hunter Riley 3 signing out. Go buy my book, Stack Silver, Get Gold. It's the #1 best-selling book in the world on Amazon in the gold and silver markets. See you guys.